Okay, so let's talk about position sizing. And position sizing is one of those things that new investors don't really know much about. So I want to just give you a couple of quick things to think about as you go on your investment journey. And position sizing is about how you split your money. Okay, so let's say you have $50,000 to invest, right? That's either, one stock. You could buy all of your 50,000, but many people want to diversify. And diversification is really about spreading your risk across multiple companies so that if one goes down, another one goes up, overall, hopefully you make money. But position sizing is not just about how you spread your money, but how much money you spread across each company. So let me give you an example. If you got $50,000 and you want to spread it across 5 companies, let's say $10,000 a piece, is that how you do it? Do you just put $10,000 in each one? Or do you say, actually, let me look at 2 things. Number one is, what is the share price of the company that I'm buying? Number one. And number 2 is, how much does it move? Because here's the thing, $10,000 in a company where its shares are $1,000 a share, right? $1,000 a share means you get 10 shares. But if you have $10,000 into a $1 company, now you've got 10,000 shares, okay? 10,000 shares, if you get a 1% drop in that, or a 10% drop in that, it's going to be such a big mental impact to you, because a 1% drop is 1 cent, right? A $1 share, 1% is 1 cent. If it drops 1 cent, you're going to lose $100. If it drops 10%, you're going to lose $1,000. And whilst it's true, right? Whilst it's true that a $1,000 stock that drops 10%, you'll lose the same amount of money. Generally speaking, the higher a stock price is, generally speaking, the less it tends to move around, because it's such an expensive stock, so it doesn't get traded as quickly. Because people that don't have money to buy a $1,000 stock don't tend to move it as much. And so the risk in a smaller cost of share tends to be higher than a higher cost share. Again, not always, and there's days I've seen crazy things happen, but I'm just saying, consider position sizing, right? A lot of institutional investors like big corporates, hedge funds, pension plans, and so on are actually not allowed by their rules to invest in a share that's worth less than $5 a share. And so therefore, when you're buying these small shares like $1, $2, they tend to have huge swings in and out. And if you think, well, I'm going to be diversified and put 10,000, 10,000, 10,000, 10,000, 10,000, all these into all these shares, you might think that you're spreading your risk equally, but you're actually not, because the one in the $1 share could drop so much more than the one in the 10, 20, 30, 50, $1,000 share. So consider ultimately, what are you prepared to lose, okay? Because it's always about what you're prepared to lose. Because if you're going to make money, well, great, you made it. Who cares? It's a good thing. You don't have to prepare for the upside. You have to prepare for the downside. So when you're buying that $1 share, you might say, hey, I'm willing to lose $500. Okay, well, if you're willing to lose $500, it means that on this one, if your $10,000 investment on a $1 share, if it drops 5 cents, you have to get out, because 5 cents is 5%. Whereas on this other one, the same $500 might mean that it has to drop $50 in that share for you to lose that 5%. So the way you set your stop losses when you get out is really based on the risk that you're willing to take. So just remember, position sizing is just as important as diversification. Don't just take for granted that if you put your investment in equal dollar amounts, the risk will be the same no matter where you put it. Understand how much the stock moves on a daily basis and understand what your risk might be, because a very small stock could cover a lot of ground in a day, because a lot more investors can do big volumes which will move the stock because they have the money to do it. Whereas in the large stocks, the $300, $500, $1,000 stocks, there's a less movement generally speaking, because it takes a lot more money to buy those stocks. And so it's just something to remember for new investors. Hope it helps you. See you next time.